Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Of course, what we're going to do today is focus on the charts. No BS, just charts. What are the probabilities telling us about the markets, crypto, commodities, and individual stocks? Where are the trades today? So we're going to dive right in. Before I do that, quickly, the GDP numbers did come out. They came out at 3% growth. So again, that's pretty solid, ahead of the 2.5% expectation or forecast. But it's important to remember that these GDP numbers are a little skewed because of the tariffs and trade wars. So because of imports and exports and people rushing to import before tariffs, it really kind of skewed these numbers a little bit. So the best thing to do is take the negative 0.5% from the first quarter and average it with the second quarter. That probably gives us a good general sense of where the economy is, which is still growing, albeit a little bit slower. All right, so into the charts we go. The S&P futures this morning are trading fractionally higher. If we take a look at where we closed yesterday, we closed really right here on the S&P. So again, you can see we are still net positive, but it's very minimal, not a lot of price action going on here. All right, so again, we'll keep an eye on this and see where it goes. All right, overall, if we look at the daily chart, let's flip over to the S&P 500. Yesterday was another example, and I warned about this yesterday, guys. You can't say I haven't been giving you a little bit of a heads up that we're into a lot of resistance, and the markets are showing signs of weakness. What we saw here, guys, last Friday, check that. Friday, we had one last up day. Monday, we opened higher on good news, the European trade deal, and we closed flat. Tuesday, we opened higher, even making a new all-time high, and we closed down significantly. All right, listen, I have traded again for 26 years, since 1999. And when I see this price action, especially with the VIX starting to go up, it tells me institutional money is starting to exit their positions, and they're essentially unloading into retail, which is still eagerly buying. So again, I'm just giving you the heads up here that this historically is what I've been seeing. And remember, it's all about the data and charts. It's no BS. So I'm just telling you again what I have experienced in my trading career over and over again through bull markets and through bear markets. So we'll see where things go today. Obviously, today the GDP is taking a backseat. Why? Well, simply because we're waiting on the Federal Reserve. The Federal Reserve, guys, again, reporting today their policy statement at 2 p.m. Eastern time, followed by a press conference with Jerome Powell at 2:30. And remember, no interest rate change is expected. In fact, there's almost a 0% chance of any interest rate change. It's all about the guidance that they give and Jerome Powell gives in his press conference. Right now, the markets are pricing in a rate cut in September, which is the next meeting. The question is, will they deviate? Will they make the market realize that the economy is still doing pretty well? There's no reason to cut. Or are they going to kind of bow to Trump essentially and cut rates and kind of go with that September cut? We will find out today. Chances are we'll be looking at that Fed Watch tool tomorrow and deciding what the market is telling us at that point. All right. So again, S&P 500, we see again the lower trend lines. We're still hovering here. We have this bigger parallel channel going back to the low of October 2023 through the recent high right here. And that again is giving us a major wall of resistance right here with a nice sell-off yesterday of about 19 points on the S&P. Taking a look at the dollar is screaming higher. I did tell you guys yesterday, and I went over this quite acutely, is that for the first time yesterday, we made a higher high on the dollar in quite some time. So when you look at trends, right? Trends, you have a high or a high here or even a high here, right? High, lower high, lower high, lower high, lower high, lower high. And even here was lower than here, right? This is lower than the high there. Yesterday, we made a higher high. We talked about how that is a change in trend in the US dollar, right? Doesn't matter what I think or feel about the dollar eventually slowly going lower. I still think that's the case longer term. But in the near term, the bias has now gone to a stronger dollar. Now, you still will get pullbacks. But the interesting thing now is that if we confirm above this zone, this will then become support and a floor in the near term. Now, again, well, let's see where we close today on the US dollar with the Federal Reserve giving their interest rate policy. The dollar will likely go wacky right around 2 to 2:30 p.m. So let's monitor that into the end of the day and see where we go. But either way, a higher high is now a slightly bullish signal on the US dollar. The 10-year yield had a big fall yesterday. It is rebounding a little bit today. Today is a day where, again, interest rate policy may cause a major move up. Could we possibly go up here? Could we break this lower trend line on the 10-year? Obviously, you're looking at that rate decision or lack thereof and commentary as the key catalyst for the next big move in rates outside of that wedge pattern. STX is a chip company. STX, again, reporting earnings yesterday after the bell. Like so many chip companies, if you go to the daily chart, look at this daily run. All right. And again, I've kind of, hopefully made an impression on you guys to understand that when you have a vertical move of 147% with only minimal pullbacks along the way, that even if a company reports stellar numbers, the odds favor a pullback, a profit-taking setup. Now, it doesn't mean it's going back to the lows. It just means it needs a break. It needs a little pullback of consolidation, and that's what we're seeing today. The one thing I would just note is this pattern on STX is bearish. Notice how the vertical move was consistent here, and then you had kind of it pulls back from let's say fifth gear down to fourth gear, and notice how slowly it comes back to these highs. That's actually bearish. It's not really a bear flag because you made a higher high, but this is still a bearish setup. It tells you that the momentum was waning, and it also tells you there's distribution going on, which is why the vertical nature wasn't able to continue here, right? So again, if it was just as strong, you would have seen it continue up like this. In this case, it takes a leg lower, and then look at how it struggled to kind of go back and take out that high. So those are little nuances in charts that I pay attention to here. And again, interestingly enough, I did take a short into this on my own going into the Seagate earnings and made some nice money. I picked it up on the short side just a little bit before the close. And obviously the dip I took profits on. Just again, me just reading those charts. And this is obviously what I always hope leads to you guys saying, wow, there's real money to be made from me. Even though I'm not an institution, even though I'm not a millionaire or a zillionaire, I can still make significant money by looking at the charts and trading them in a short-term basis, right? Listen, if you buy and hold on the markets longer term, 20, 30, 40 years, you should do very well. That's one way to do it. I've found that I can make a lot more money by looking at the charts and letting them tell me on a shorter-term basis about where to buy and where to short, where to sell, where to cover, etc. All right. Couple other charts I want to go over today, guys. Garmin is one of my favorites for a short today. Again, Garmin, guys, a shorting opportunity. Now, this is gapping up a little bit on earnings. Yesterday, it closed at 239. It's trading at 243. You might say, wow, it's up on earnings. But remember, we've been seeing more and more how these stocks open higher after big runs and then they reverse. Right? We even saw it with Boeing yesterday. In fact, if we look at Boeing, remember Boeing was up on earnings initially. And if we look at this. So I actually, in the game plan yesterday, and you guys can always go back and look. These are all there recorded for all of history to see. I talked about how Boeing was coming into major resistance and how stocks on good news are gapping up and then seeing a sell-off. And so the idea here is that on Garmin, this is an idea for you guys, just an idea. I love giving you guys trading ideas for the day. That's what the game plan is all about. What is my game plan for the day? Well, this one right here, I actually picked up a small short position pre-market here on Garmin. And again, the idea is you have a gap fill right here, which we've basically filled pre-market. You have double top right here. The stock has gone up from a level of right here on April 7th. So we're up about 41%. And if you look at pre-market, we're really up about 43%. Look at the vertical nature. And again, my guess, and again, this is an educated guess on technical analysis, is that we'll open, maybe we'll push up to 246, 250, but ultimately I would expect a pullback to, let's say, 235, maybe as low as 230 on these earnings in the coming days. Wingstop, great move up. Look at this move on earnings, guys. I want to just shout out to a congratulations. If you're a member of Smart Money Stocks and ETFs, you got this in the small cap catalyst. And Drew, who runs the small caps, he's been crushing these plays. He picked this up yesterday, just yesterday on the chart setup formation. In fact, I think this was his overnight hold trading setup that he saw. And this is, again, he has a course out there you guys can pick up for, it's pretty cheap. But again, you can find that on Verified Investing. But the idea here is that this setup just paid out in literally less than 24 hours. Congratulations again if you're part of Smart Money Stocks and ETFs. And don't forget, guys, Smart Money Stocks and ETFs, it's my service, but it's also other traders. They all included in there, small caps, ETF trader, the dividend trader. If you're kind of not someone who trades on an active basis, but you're like a dividend hardcore, let's just get those like good quality names. I don't want the excitement essentially of crazy moves. Just like pay me out that dividend and grind it out. Great service there, guys. Smart Money Stocks and ETFs at verifiedinvesting.com. All right, Humana trading up on earnings here, guys. By the way, there's no way I'm looking to short Wingstop, and that's why I didn't go over a level. It's a very small company, and again, I want to stay back on that. But Humana, good move up. The reason I'm highlighting this, there's no real trading levels yet, in all fairness, because it's been beaten down. So if we look at this, it's been beaten down like crazy. By the way, look at these former support levels that I had on the chart here. If we just reach this one over, look at what we just hit recently there, and that's a bottoming tail. If you're a technician of the charts, if you look in a textbook, you're going to find that as a reversal bullish signal. The stock, again, gapping up. But if you look here, right, I mean, it's not even close to shortable levels yet. It's been beaten down like so many of the insurers. UNH yesterday had earnings. That thing got crushed on earnings, another healthcare provider. And so, again, good job for Humana for kind of bucking the trend of a lot of these healthcare stocks out there. All right, a couple other things to go over here. Number one, AMD. AMD did not put in a topping tail yesterday, but it is into major resistance. I would be looking for a drop on AMD in the coming days. 1, 2, 3, 4, 5, 6. So that's a 6 count. It's getting close to a time count, something I teach in the Winning Trader series. And again, ultimately, again, lots of resistance here. I would expect a pullback. AMD has had an epic run. The valuation of AMD is now basically, from a PE standpoint, essentially where NVIDIA is. So they're essentially priced the same, even though obviously their stock prices are pretty similar as well at this point. Obviously, market caps are a mile apart at this point. Meta reports earnings, guys. Meta reports earnings after the bell. I'm going to go over Meta and Microsoft now because, again, those are going to be big players after the bell today. Take a look right here. Shoulder, head, shoulder. Now, it has not triggered, so in all fairness, you can't jump the gun here. All right, again, the trigger is if it breaks this line, but it is a bearish pattern, and it is coming off double top. So let's see what happens. We know Meta's been poaching a lot of great AI talent. That's great for them longer term, but the question is, how much money are they spending? And again, remember, Meta has a history of saying, hey, we're going to up our amount of CapEx, right, our spending to try to do better. And then the market has sometimes actually punished the stock because of that. And I just heard, again, they hired another top talent they poached another talent from Apple. At some point, by the way, they're doing this, by the way, from a lot of these big cap companies. I do wonder if there's ever going to be a backlash where these other companies start to purposely kind of say, you know what, you're going to do that from us, then we're not going to try to help you in any regard. Just kind of a thought on my own basis there. But again, if we break here, your estimated move to the downside, again, you can do a measured move here, classic TA of the measurement of a head and shoulder. A break point would bring us down to about 630, 635. That would be your short-term downside. On the offset, if on earnings it rallies and takes out the high of the head at 748, essentially, then it would negate the head and shoulders, and that would be off the table. There would be no more bearish pattern there. Microsoft, let's look at that real quick. Microsoft continues to hammer here. In all essence, this should fall on earnings. And the reason I say that is because, again, if you look at this trend line, and again, listen, it doesn't guarantee anything. I want to be clear on that, right? There's no guarantees in life. There's no guarantees in trading. But every time we've hit this line, we've had a pretty significant multi-month pullback. And so I would generally assume that we're into this level again. We would see a pullback here on the chart. So again, something just to kind of keep an eye on that front. I would be bearish going into earnings on Microsoft. Now, one that I'm bullish on is Qualcomm. Qualcomm, guys, take a look at this. So it's a chip company. Maybe it's not as sexy as AMD or NVIDIA, but it's still a chip company. And if we look at this, look at where the stock is trading. It is 43% off the all-time high from a year ago. So again, number one, it's not extended like Seagate Technologies is. In addition, look at this trend line here. there was a breakout. So see this trend line? All right, 1, 2, 3. And on the fourth, it broke out. It retraced, and now it's gone into this kind of consolidation phase on the charts. And so again, we look at this and we say, okay, right here down to here, it's been consolidating. I would generally be bullish going into earnings on Qualcomm, looking for a pop, although I do think upside's probably limited to about 176 to 177. But again, I like the chart. Again, remember on earnings, folks, and this is really important, earnings you can either be very right on or very wrong on, right? So again, Qualcomm, if it doesn't perform, this thing has downside to like 140. So, I mean, there is a lot of risk there to it, but I do like the setup here. And you guys know I'm not shy about putting myself out on the line because, again, I'm just relaying what the chart probabilities are. It's up to the chart probabilities to see if it actually happens or not. All right, into Bitcoin, let's flush out and see what else we have going on here. Bitcoin has continued to hover in this. Again, amazing to see how long Bitcoin's been chopping inside of this sideways pattern. Remember, the only reason this is not bullish consolidation is because of the bearish reversal topping tail. The most recent signal, basically the most recent signal takes precedence. So again, if you negate the topping tail with a close over, let's say 123,300, now that becomes absolutely hugely bullish. But as long as this bearish signal is here and that move is off of that, it slightly favors the downside on the charts. And these are nuances that, again, I love revealing to you guys because I truly think it's going to make a difference in your lives in terms of understanding and putting yourself on the side of the higher probable trade. And by the way, that's what these institutions do. They literally have people out there they pay millions of dollars per year to as salaries to give them this same information. I love the fact that I can do a lot of this to you guys or give you guys this information. Now, listen, they all have more money than I do or than any of us do. They have trillions, if not, billions of dollars under management. But it doesn't mean we can't at least make returns equal to what they're doing. And I think that's the important thing. Everyone looks at these institutions and is like, oh my gosh, they're the big, I could never perform like the. Actually, you can. Actually, you can. It just takes a little work. But listen, if I can do it, anyone can do it. I'm firmly in belief of that. All right, let's take a look at gold today. On to gold. Gold is moving lower. We know it had a breakdown. It does favor further downside. I am still short with half my gold position in the short term. I still have my net long gold holdings, obviously, because I'm still bullish longer term. But like I always say, hey, listen, if in the short term the chart's telling me it's going to go down, am I just going to be an idiot and not step up and short it? Like I'll make some money on the downside and then I'll just go back on the bullish side. Sure. And it's the same thing, by the way, same thing with Bitcoin. I think that's important to understand is that, there are assets where a lot of times I'll say, hey guys, I'm bearish on this for a pullback. People are like, oh, he's crazy. It's going to 5 million or it's going to 1 million or it's going to 500,000. It's like, yeah, it might. I actually kind of agree with you. It doesn't mean if the chart is telling me based on probabilities that it's going to fall, let's say 20% or 10%. Why am I going to sit there and be like, oh, no, I don't want that gain. I don't want that. Like, okay, that doesn't, for me, it doesn't compute. Like, if it's telling me with a 75% chance it's going to come down, why wouldn't I make money that way? And then when it tells me 75% chance is going back up, I'll just jump long again. And that's the beauty, again, guys, of technical trading, what we do here at verifiedinvesting.com. All right, let's look at silver real quick here, guys. Silver coming down as well. Again, not surprising. We saw the 2 inside bar consolidation. Again, here's your flagpole. This wasn't really a fully formed bear flag, but anytime you have a big drop, and you go sideways without really rebounding sharply, it's obviously telling you something. And that was telling us, again, small downside. My first support, as I've said many days in a row now, is around 37.15, give or take. And again, that will be first support. Doesn't mean it's going to hold there and start to rally, but at least that's your first line in the sand. Oil broke back through the bear flag consolidation. I've already isolated down where if it hits today or tomorrow, I will be looking to short oil. It's right around 70.5, maybe 70, 75. This trend line, which has worked beautifully in the past, should still be great. And again, that will be a level I look to pull the trigger on shorting oil. And then lastly, natural gas here, guys. Let's touch base on that. We knew this was bearish consolidation. Again, this is and by the way, by no means do I want to even there's no sense in patting me on the back guys of any of these, whether it was the gold breakdown that was coming or this natural gas or any of these other stuff because it's just probabilities, right? It's just like if something has a 75 or 70 or 80% chance of happening, I'm just looking at the chart. The chart is telling me that, and I'm just repeating it to you guys. I'm just verbiage repeating it. And so the key is understanding that at 75%, every pattern has a 25% chance of failing, right? If that's what the odds are. And so what it tells us is that 3 out of 4 of what I relay to you will be right, 1 will be wrong. And it's just simple mathematics, right? And I think we can all understand that. And I think it's important because again, just looking at this chart, again, the chart, look, broke below, inside bar, which is we know flagpole, bear, and it just tells us it's going down. And what was my next target right here? Remember, I'm not buying here, but again, this would be your next level. If you're really aggressive, maybe you'll buy, but again, for me, I'm not yet. But that's your target, and that's just what the chart was telling me, and so I'm just going to relay it to you guys there. All right, so listen, my job, I look at me as being kind of the linguist, the interpreter, if you will, and my goal is to hopefully help a lot of you guys. Hopefully, even if you think I'm crazy, that's fine. I don't mind. But if you pick up one thing in the game plan that you guys say, all right, this makes sense, or, oh man, I see that in another chart and it made you some money, that's awesome. That's awesome. Then my job is done. And I love that these game plans are free. By the way, folks, mid-month game plan and trading the close are going to move over to verified investing only. So just be aware, you may want to go over and follow Verified Investing. Ben launched his RSI Trade of the Day show yesterday, and he did another one today. These are fascinating shows only now on Verified Investing, so be aware of that. He basically gives you a trade setup every day, and he goes over how the RSI, he basically will teach you RSI in these shows. And again, it's actionable information. My goal, honestly, is really that every show that we bring to you guys from Verified Investing should have education and something actionable in it for you. All right. So anyways, you guys are awesome. And again, your support, your viewership, as we see our numbers, as you guys spread the word to your friends and say, hey, listen, look at these guys. These guys are doing something different than the hype on every other place, or the narrative is being spun. That's what it's all about. So make sure you go follow Verified Investing on YouTube. Obviously, all our shows play live on our homepage at Verified Investing as well. Thank you guys again. Seriously, have a great rest of your day. I'll talk to you soon.